Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money world and find the stories hidden in plain sight. Today we're diving deep into a financial report from T. Rowe Price Retirement Funds Incorporated, specifically looking at their Retirement 2050 fund. It is a big document full of numbers, but we're going to cut through the jargon and find out what is really going on. This report is all about the financial health and operations of the Retirement 2050 fund for the period ending the 30th of November 2025. Think of it as a checkup for the fund, showing its assets, liabilities, how it performed, and what it invested in. So first up, let's talk about costs. For a hypothetical $10,000 investment in the investor class of the Retirement 2050 fund, the costs over the last 6 months were $33. That might not sound like a lot, but as a percentage of your investment, it is 0.62%. It is important to understand these costs because they chip away at your returns over time. Now, let's look at the size of this fund. The total net assets were a massive $17,713,438,000. That is over $17.7 billion. This fund is huge, holding 27 different investments in its portfolio. The portfolio turnover rate is 4.3%. This tells us how often the fund manager buys and sells investments within the fund. A lower turnover rate generally suggests a more buy and hold strategy, while a higher rate means more frequent trading. 4.3% is quite low, indicating a strategy that aims for long-term growth rather than active trading. Now, what did this enormous fund actually invest in? The asset allocation shows us the breakdown. A whopping 68.6% is in domestic equity funds, meaning investments in companies based in the United States. Another significant chunk, 28.9%, is in international equity funds. So companies outside the US, there is a smaller slice, 0.7%. In domestic bond funds and 0.3% in international bond funds. US Treasury debt makes up 0.1%, and then there is 1.4% in short-term and other investments. This tells us the fund is heavily weighted towards stocks, both domestic and international, with a smaller exposure to bonds. Let's see exactly where the money is going within those categories. The top 10 holdings give us a clear picture. The biggest holdings are T. Rowe Price Value Fund at 15.5%, followed closely by T. Rowe Price Growth Stock Fund at 15.1%. Then comes T. Rowe Price Equity Index 500 Fund at 10.2% and T. Rowe Price US Large Cap Core Fund at 10%. The rest of the top 10 are T. Rowe Price International Value Equity Fund at 8.8%, T. Rowe Price Overseas Stock Fund at 8.0%, T. Rowe Price Real Assets Fund at 6.5%, T. Rowe Price International Stock Fund at 6.4%, T. Rowe Price Mid Cap Value Fund at 3.1%, and T. Rowe Price Mid Cap Growth Fund also at 3.1%. What is interesting here is that the fund is primarily invested in other T. Rowe Price managed funds. This is a common strategy for target date retirement funds, essentially being a fund of funds. Now, the costs do vary depending on the share class. For the advisor class, the cost for a hypothetical $10,000 investment over 6 months was $46, which is 0.87%. This is higher than the investor class, showing that different share classes have different fee structures, often tied to how they are sold. Looking at the financial highlights, we can see the net asset value per S-Hair for the investor class. It started the 6 months to the 30th of November 2025 at $19.79 and ended at $22.34. The total return for the investor class over these 6 months was 12.89%. That is a strong performance. For the full year ending May 31, 2025, the return was 9.63%. These numbers suggest the fund has been performing well, especially considering the recent 6-month period. Let's peek at the statement of assets and liabilities. It confirms the total net assets of $17,713,438,000. On the asset side, investments in securities are valued at around $17.72 billion. Liabilities are much smaller, around $46.45 million. This solidifies the fund's large asset base. The statement of operations for the 6 months ending the 30th of November 2025 shows us where the money came from and where it went. Income from underlying funds and interest brought in about $19.8 million. However, expenses including investment management and administrative fees were significantly higher at $48.1 million, resulting in a net investment loss of about $28.3 million for this period. But here is where the story gets interesting. While the fund had an investment loss, the net realized and unrealized gain was over $2.1 billion. This gain comes from the increase in the value of the fund's investments. Specifically, the change in net unrealized gain was over $1.9 billion. This means the investments held by the fund even though they generated less income than expenses in the short term, grew substantially in value. The statement of changes in net assets shows the overall picture. The increase in net assets from operations was over $2 billion, after accounting for distributions to shareholders, which was zero for this 6-month period, and changes in capital share transactions. The net assets increased by about $1.3 billion during this period. Let's look at the portfolio of investments for more detail on where the fund put its money as of the 30th of November 2025. The bond fund segment is about $171.6 million. The equity fund segment is a massive $17.28 billion. Other mutual funds are about $2.1 million and short. Term investments are around $267 million. It is really clear that this fund is heavily invested in equities, which is typical for a retirement fund aiming for long-term growth. Within the bond funds, we see holdings like T. Rowe Price New Income Fund, US Treasury Long-Term Index Fund, and International Bond Fund. These are all designed to provide some stability and income. The equity fund section is where the bulk of the money is. We see familiar names like the Value Fund, Growth Stock Fund, Equity Index 500 Fund, and many others focusing on different market caps and regions. The total for equities is a very large $17,281,031,000. The Value Fund holds over 54 million shares, valued at nearly $2.74 billion. The Growth Stock Fund holds over 21 million shares, valued at over $2.67 billion. These are significant allocations. For short-term investments, the fund holds a T. Rowe Price, US Treasury Money Fund, valued at over $243 million, and also some direct US Treasury bills. This provides liquidity and a safe haven for a small portion of the assets. Interestingly, the fund also utilizes futures contracts. These are financial agreements to buy or sell an asset at a future date at a predetermined price. In this report, we see positions in MSCI ETH index contracts, Russell 2000 E-mini index contracts, and S&P 500E. Mini index contracts, these are used to manage risk and exposure to the market. The total notional amount for these contracts is quite large, and the fund has reported unrealized losses on some of them. The variation margin for these contracts, which is the money exchanged daily to account for price fluctuations, resulted in a net payable of $527,000. A significant portion of this fund's assets are invested in other T. Rowe Price funds. The report details the net realized gain, change in net unrealized gain, and investment income from these affiliated companies. For example, the Equity Index 500 fund showed a net realized gain of $44 million and a change in unrealized gain of over $212 million. This highlights how the fund's performance is directly tied to the performance of these underlying T. Rowe Price funds. The accounting policies section clarifies that the fund is an investment company and follows generally accepted accounting principles, or GAAP. It explains how investment transactions, income, and distributions are recorded. It also details how expenses are allocated across the different share classes. It is worth noting that the advisor class and R class have separate Rule 12B-1 fees, which are essentially marketing and distribution fees paid to financial intermediaries. This section delves deeper into the use of derivatives. Like those futures contracts we saw earlier, the fund uses them to manage cash flows, stay fully invested, or rebalance its assets. GAAP defines a derivative as a financial instrument whose value is linked to something else, like a stock market index. The report warns that the risks associated with derivatives can be greater than investing directly in the underlying assets. This is where we see the close relationship between the fund and T. Rowe Price Associates, its investment manager. The fund pays an annual all-inclusive fee for management services and operating expenses, with the rate varying slightly by share class and declining as the fund's stock exposure decreases over time, a feature of target date funds as they approach their target retirement year. The effective fee rates are 0.62% for the investor, advisor, and R classes, and 0.44% for the I class. These fees cover investment management and administrative services, with costs for things like accounting and shareholder services being absorbed by T. Rowe Price Associates. Finally, under other matters, the report touches on the unpredictable nature of global events, things like environmental disasters, wars, or pandemics. It states that these events can significantly impact the economy and the markets the fund invests in, and the fund's performance could be negatively affected. This is a standard risk disclosure for most investment funds, acknowledging the uncertainties of the global landscape. So, what do we make of all this? Well, the Retirement 2050 Fund is a massive operation, clearly performing well in terms of asset appreciation, evidenced by the significant gains over the reporting period. The shift towards equities is a standard strategy for a fund with a 2050 target date aiming for long term growth, the low portfolio turnover suggests a steady long-term investment approach. However, there are a few things to consider. While the fund's overall value grew due to rising asset prices, the net investment income was less than the expenses for the 6-month period. This is not uncommon for funds that heavily invest in growth assets, as the focus is on capital appreciation over short-term income. The different expense ratios across share classes are also worth noting. Investors should always be aware of the costs associated with their specific share class. The use of futures contracts, while a common risk management tool, does introduce additional complexity and potential for losses, as seen in the report. Overall, T. Rowe Price's Retirement 2050 Fund appears to be a well-managed, large-scale fund focused on long-term growth for its investors, leveraging a portfolio of underlying T. Rowe Price funds. The key takeaway here is that while short-term income might be lower than expenses, the long-term strategy is clearly focused on capital growth, which has paid off in recent periods. Alright, that is our deep dive into the T. Rowe Price Retirement 2050 Fund's financial report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, see you next time.